Hello again, everyone. It's Vince from TradingWinds.com, and this is our update for March 20th, 2017. Let's take a quick look at today's markets. Well, it was a very quiet day, actually. The Dow finished lower by about 8 points. The S&P 500 was down 4 points, while the Nasdaq was flat. It was up 0.53. Now, it did hit a fresh new all-time high intraday, but not as exciting as it sounds, is it? I mean, just a very quiet day overall. It was flat all day long. Not great volume either. The Russell here down about 7 points today. Now, the Russell's really been lagging, and the Russell 2000 index is full of small cap stocks, and they've really fallen behind. Because if you look here, since December of last year, just pretty much sideways when compared to the Dow, which has seen nice gains since last December. Same with S&P, and especially the Nasdaq, which has been on a really nice roll. Small caps have really been lagging. So is this a red flag or is this an opportunity? Well, you know, that's the beauty of technical analysis, is the fact that you really don't always have to ask why. It's just something to keep in mind. And the easiest way to deal with this is just stick to the basics. In other words, mark the high here and mark the lows. And what you're really dealing with here is a channel. And just wait. Sorry, I should have drawn that a little straighter, but it's a channel. That's all it is. And you just need to wait for a break either above the highs or below the lows. And what you really want to see is a close outside one of these lines, not just a trade. Okay, but for now, we're smack dab in the middle. That's what's going to be a little while before we see a break. But if we close above the highs here and see some follow through, then of course, fresh new highs, no resistance up ahead. That should kick off another run. But if we break down here and close below the lows, not only do I think this, will obviously make its way to recent support zones, such as the 1310 area, followed by 1260. But I think if this happens, you will also see some of the other equity index charts start to roll over. Now, bonds today up about 0.5 point. We're back to that 20-period moving average here. We'll see now whether it just bounces off and heads back towards these lows, or if we can make something more of this. Remember, if we look at the weekly time frame, it looks horrible. So this should just be considered another opportunity to potentially get short here once you see a reversal sign. But very, very strong downward momentum still in place for bonds. Gold, on the other hand, did get a bit of a boost, up $3.80 today. And more importantly, if we look at that weekly chart, we did see a trade above the highs here from last week. So I think we'll see more upside in the near term. Crude today, nice recovery by the end of the session, because it did gap lower and was much lower, but still finished lower by about 40 cents or so. Now, one thing to not overlook is, when you're trading and used to trading some higher price stocks, sometimes you forget about the little guys, or what we would call the penny stocks, anything under $5. And if you look at this, some of them do not have enough volume and just do not trade well. But others, you trade just as well as the higher price stocks. And you can pick up some shares here like IDRA, for about $2. It's the price of an option, of a call option, for example. Very inexpensive, and some of them put in very, very nice patterns, just like the expensive stocks. I mean, if you look at this one, there's a nice cup and handle formation here. Here's a nice cup from that previous high, $2, right back there, pulling back, puts in the handle, and now breaks out. So, there are some nice setups, very inexpensive, which means a very small amount of risk. You should treat them like you do everything else or any other price stock, where you would, mark a stop loss in case it starts going against you. But remember, your risk would be very, very minimal. We're talking about a few cents. So they present a great opportunity as long as you're looking at the ones that have enough volume and are fairly predictable. The same chart patterns you would use for expensive stocks, you would use for the lower ones. Take some time on a weekend, scan through a bunch of the stocks under $5. Trust me, you'll find a gem or two every once in a while. All right, that's about it for now. Enjoy the rest of your day, and we will see you on our next update.